All right, we start with a big divergence in two pillars of the tech trade, software and semi stocks, heading in different directions in this second half of the year. The IGV ETF up. It sounds like I give up, right? That's what it looks like.
You never give up.
I give up.
It's not what you do.
Up 22% since the start of July, while the SMH chip ETF has gotten crunched, down more than 6%. Top software names making major moves higher in that time: Oracle, ServiceNow, Salesforce, Snowflake, all up double digits, while big chip stocks continue to trade lower. Lam Research, AMAT, Micron, Qualcomm down 10% or more. So will the second half separation in tech continue into the year end? Let's get to that. But why don't we begin with your reflections on the fact that here we go again, another Dow record high, the S&P 5969, close to 6,000. Then lead me to the tech.
No stopping it.
There's no stopping it.
Now, if I had told you, if I'd said Tyler Matheson, there's going to be a headline this week that Russia fired ICBMs into the Ukraine, what's going to happen to the market? And you'd be, well, if you had said it to me, I'd be like, well, the S&P is easily down 100 handles.
Yep.
The VIX is north of 25. Gold's up $100. 10-year yields are probably significantly lower on a flight to quality. None of that happened. So I guess if nothing else, that just shows you the resilience of the broader market and passive investing being first and foremost in everybody's mind. With all that said, I mean, you have to say at some point things can get a little dicey here, given all the geopolitical risks out there and all the other things we're going to talk about later in the show.
Yeah, let's move on then to the question of this outperformance.
Yeah, the one guy didn't answer. You can say it, Tyler.
No. Wait a second. Listen to how we led the show. Before we get into it, what are your thoughts on the market?
Okay, he's a little defensive, Tyler. I'm not.
You're not defensive.
And I'm happy to talk about this because I think we're going to maybe even talk about the underperformance of semis, although maybe this is that conversation right now. So it's partially because I think we've priced in so much good news that you had a day after the day after on NVIDIA. In other words, stock finally did give up a little bit of ground.
NVIDIA was down today, right? Yeah, it didn't. There it is.
But I as we argued even yesterday, and I think even the 3.4% move today is something that, all things considered, the zoom into those numbers, the fact that I think they kind of downshifted successfully in terms of the guide. But software is moving because it is really seen as the next reverberation out. You throw a pebble in the water, Guy, what happens?
You get ripple effect.
Okay, you get ripple effect, and that's really what I think is happening. No, but I mean,
then the ripples go away.
The ripples go away eventually, and I think at some point what we've seen other times is software has actually followed semis, and I think that's happened again. I think software, ton of upgrades this week, but we heard it from everybody, from Snowflake, even Datadog, who I think 6% of their ARR is actually an AI customer base. Yet that base tripled in the last year. That's the kind of thing you do in software, and none of these valuations make sense. And we've talked about this with Palantir. I think it was 38 times forward sales, which is absurd. But the argument here is that if you're playing AI, you're playing it through the enablers, and software platforms have different ways to do it. And frankly, that's the way a lot of the consumers are reaching out. But more importantly, enterprise is happening right now. And I think it continues.
Bonawyn, thoughts on the broader market hitting new highs on the Dow, the S&P within a hair of 6,000, or pick up on Tim's thinking on the semis versus software?
So I'm going to be defensive and offensive.
Okay.
I'm going to avoid the question first and then answer it second.
Very nice.
So in terms of the broader market, listen, I think we're in essentially an everything rally right now. Going into the NVIDIA print, I think a lot of us spoke about how we were a bit concerned about that. We'd like to see it perhaps trade a little flat or perhaps just be a bit more defensive in terms of posturing before going into that print. I think that kind of explains the move that we saw post-earnings because it was yet another blowout quarter. I think questions about Blackwell supply and ability and back ordering and pull forward of ordering there, I think those concerns have been assuaged. And then in terms of the divergence between what we're seeing from SMH and I Give Up, is, a lot of those names. Let's take Salesforce, for example. The question was, and this is also with some of the hyperscalers, this AI-related CapEx spend needs to be justified. That was the prevailing wisdom at the time. And these companies were coming under pressure because investors really didn't feel like they had an accurate answer to that question. You saw Salesforce trade off, I don't know what it was, 25% post-earnings. And so a lot of those names had gotten beaten up coming into the print. And so that explains a bit of it. It's essentially you have like a star player like NVIDIA dragging up the rest of the balance. And so you've kind of been mired in that drag because, again, there's been a massive divergence between AI-related CapEx spend and then CapEx spend going forward.